Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, on that note, let's actually invite our next set of guests on the show as well. We have Mr. SP Tulsian of sptulsian.com joining in. Good morning, sir. Thanks for joining in. Actually, let me take up some of these specialty chemical stocks with you. It's a space that you track very, very closely. And Bhansali was one of the stars of 2017, and it's come off quite a long way since then. How would you view a company like this one?
See, actually, there are many stocks which have really risen a lot, and I sometimes, in fact, we have recommended Bhansali Engineering. I remember a couple of years back at 20 rupees, Himadri Chemical at 17 rupees, and in fact, both these stocks, these are just examples I'm giving. Both stocks rose to a level of about 240, 250, maybe 6 months back or about 8 months back. So that was, I think the valuations have taken a stretch because of the frenzy which you have seen in mid and small cap, and your colleague just now compared Bhansali Engineering with Ineos Styrolution, and if you see even both the things, if you take a call on Ineos Styrolution, the company had posted an EPS of closer to about 38-40 rupees for FY18, while Bhansali had an EPS of about 6 rupees. So if just I go on the historic earning parameters, the Bhansali is ruling at a P multiple of about 24-25, while Ineos Styrolution is ruling at a P multiple of 20, while Ineos as a multinational promoter with 75% stake, while Bhansali has a promoter stake of 55%. Even size-wise, Ineos is a larger one in terms of the top line and all that. So these are just the examples that were lot of exuberance. This is just in the ABS resin space. If you take the phthalic anhydride and other this one, maybe like Tirumalai Chemical, IG Petrochemical, we have seen the same kind of things happening there also. The exuberance, seen having gone to the roof. And maybe in the other polymer, maybe like if I just take a call on Multibase, again a multinational, or maybe Kingfa Science, again a Chinese promoter company. See, similar is the case there also. So probably I think that we have been keeping the positive bias on all these stocks. The 6-7 stocks which I've just mentioned, just for an example. In fact, the list is long. You can add the names of dyes, dyes intermediates, caustic chloralkali space and all that. But I think that the valuations are seen nearing coming to its realistic level. Maybe on a select basis, as I said, that Bhansali Engineering, we will be looking at 125 rupees, not at 145 at the current price. But the other stocks, or maybe the stocks which are in this space, having proven have shown the financial performance, have proven track record, I think we are keeping extremely positive view. And this is the time to accumulate, but on a select basis, but keep booking profits as well, because what is happening in these stocks that you see renewed buying coming in, case in points has been the Avanti Feeds, which corrected about 15-20 days back to a level of 13-1400 where I recommended, and moved to a level of 1900 in 3 or 4 days, but again corrected back to 1700. So what my point is that volatility will be seen in these stocks, but all these sectors have excellent potential going forward, with the earning growth and promoter track record to be seen in these sectors and in these companies.
Okay. Mr. Tulsian, good morning. I wanted your thoughts on Reliance. It's corrected a bit from the high point. You think it could support the market from here?
See, Anuj, in fact, I would say that the Reliance has a big role in supporting the market now. And if you see the Nifty position, I don't have the data, but if you take a 1 month behavior or maybe 45 days behavior, I think Reliance has risen by about 8, 9, 10%. And post Q4 numbers, we have been saying that we are extremely positive on Reliance Industries going forward. Maybe if you see all their verticals, I'm not talking of the refinery and petchem. In fact, petchem is the star performer, and which will continue to be so, more especially after the refinery off gas cracker plant having installed, which is giving them a lot of margin expansion and all sort of things. And even the refining segments, we have seen some kind of contraction in the gross refining margin by maybe about 50, about maybe 0.5% or so, 50 to 100 basis point. But going forward, both their bread and butter verticals are going to be seen quite positive, doing quite positive. We are quite extremely positive on Reliance Retail, which has been the case. We have said that many times. I've said that many times that $10 billion of top line in the retail space, number one company is going to give them extremely value on sum of part method basis. And maybe going forward, I'm not saying taking a near-term view, but ultimately the Reliance Jio and Reliance Retail are going to get come out with the public issue and IPO monetization, and that will be seen really a value accretion for the stock. So taking all this into consideration, if you don't have concern on any of the vertical now, with all the verticals are seen to be doing quite well, I think this is the star. This is the stock which will keep rewarding the shareholders and even balancing the Nifty going forward.
Okay. Mr. Tulsian, hi, good morning. I wanted your thoughts on a stock like CG Power. That stock actually has fallen off a cliff over the last many weeks. This morning, Kotak has upgraded it, saying that the core business is still extremely strong. Would you advise investors to get in here, or do you think this is a risky one?
See, Sonia, I think if you really take, I have not read the Kotak report, but if you really take a call on their core business, I think it is extremely robust. If you see their power business and industrial business, in industrial, railway is really doing extremely well. Power has not shown good kind of traction or growth in margin. I'm referring the standalone. But if you really take a call on the industrial, I think railway, they are making a big inroad. They have been regularly receiving the orders. So I don't think that there is any kind of concerns on their domestic business or standalone numbers. If I just come on their global operations or maybe the consolidated one, in fact, FY18 was the exceptional losses and losses from discontinued operations. And now, Belgium and Ireland, both the units have turned EBITDA positive. Whatever, the talks and informations which we have gathered, both have turned EBITDA positive, where the debt of closer to about 2,000 crore is involved. And the management has given a second thought that they may not go for monetization. And once they receive the Hungary payment, because there has been all this news flow coming in that company may not be able to receive the Hungary payment of about 250 crore, for which the deal has already been concluded. The agreement has already been concluded. Only the deal has to get consummated by receiving 250 crore. So there is some kind of rumors or fear that 250 crore will not come by 30th June. If it does not come, definitely that will be seen negative. But overall, I'm hopeful that the amount will come. It is just a matter of time. Maybe if not 30th June, maybe 31st July. So overall, positive on the business going forward. But the only concern which I find in the stock is that open interest of about 4 crore plus. And you know that with the expiry of June series from July series, all the open positions will be security settled and not cash settled. So probably the long positions which have been built are not seen getting rolled over, and that is getting liquidated. And once I think this pain of, in fact, this kind of behavior is seen in 46 stocks which will be seeing the security settlement from July series onwards. So we will be seeing this kind of volatility seen happening with the which may end with the expiry of June series, and let's hope that by then we will see the receipt of 250 crore also from the Hungary unit sale. And once that happens, then all their overseas unit, as I said, Ireland, Belgium, Indonesia, they are all doing quite well. And on the domestic front, as I said, the industrial segment is really doing extremely well. And even power segments, maybe because of little competition or little T&D orders, or transformer orders tapering down, you may see the flattish kind of things, but the positive outlook remains continued vis-a-vis looking to the share price having corrected to a level of about 52, 53.
Okay. Mr. Tulsian, a stock like Gruh Finance, now it's fallen about 20% from the top given the market volatility. There's some news have been more relaxation in terms of the priority sector guidelines, ticket size for loans going higher. Is this a buying opportunity on Gruh?
See, in fact, the raising the limit to 35 lakhs and 25 lakhs, in fact, is positive for all the finance company. I won't say that only for Gruh Finance, but coming specifically on Gruh Finance, the recent correction, generally that is seen happening in case of the shares, which go ex-bonus. And similar thing has happened that many of the HNIs, they buy the stock for tax planning purposes and all sort of things. But I think that Gruh Finance, which has traditionally enjoyed a premium valuation, maybe P multiple of almost 2 times of the comparable peers, whether you take a call on Kenfin Home or GIC Housing, the comparable peers I'm not taking a call with the valuations of HDFC Limited or Indiabull Housing Finance or maybe LIC Housing. But if you take the situation that scenario is going to continue, Gruh will continue to enjoy the premium valuations, but we are keeping in fact positive view on all the housing finance company going forward from here on, because we don't see much pain. Maybe some kind of pain, or maybe the interest reduction may have been seen in case of loan against property or to the developers loan being given, because now they have been given loan at a rate of about 11 to 12% to the quality developers and all sort of things. But overall things are positive, so one can place Gruh Finance in the category of the housing finance companies as a buyer, because we are, as I said, that we have been keeping positive stance on all the finance companies, housing finance companies across the board, whether larger one or the mid-size one.
Okay, Mr. Tulsian, just a very quick thought also on ICICI Prudential. Yesterday it was down quite a bit. You reckon it's a good buy now?
See, Anuj, in fact, we have been keeping positively on the entire insurance space, insurance sector, but we are more positive on the life insurance ones. And if you take a call, in fact, our three stocks, HDFC Standard Life, ICICI Pru and SBI Life, in fact, in the same pecking order, we all are advising, buying in that, because what is happening that insurance sector is seeing a good growth. What has happened that maybe when it opened in 2000 to 2010, it has just remained into the tried to stand on its feet. 2010 to 2015, we have seen the insurance sector struggling hard. But the real takeoff for the sector has started from 2015, and fortunately, we have seen all these IPOs in this last 1 year having come in the general insurance and life insurance. But as I said, that we are overall positive on insurance, but more positive on the life one. So maybe taking that into account, ICICI Pru, though it falls the second on our pecking order after HDFC Standard Life, but we are keeping positively on the stock.